Good evening, guys. This is Manoj Maheshwari from Market Ideas for Profit, and this is the weekend review of the Banknifty. I'm trying to work out a macro view of what could transpire in the near future, maybe the week or the week, the days gone by from Monday onwards, maybe for a 7 to 10 day scenario, maybe 5 to 6 sessions. So, as usual, I will use the volume profile to assess how the market is structured and what are the expectations that we can build out of it. So I've broken the days starting 17th of June into two halves. One is when we saw a significant swing low to the next significant swing high, which was on the 15th of September, which was somewhere around 41,776. So we see in the first profile that there's a concentration in the value area is from 35,000 to 48,900 odd. 40,000, roughly about just under 40,900. And this was the setup in, this was what happened during this period from the 17th of June to the 15th of September, a 2-month period. Subsequently, we saw a small pullback, which took us down to 37,500 odd, and from there on we have risen back again to test the highs that were created in the last period. And we are seeing that for now, the 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions, we are facing a resistance at the top. Now, generally, if we were to see a sharp reaction from the top, it would mean that there are a lot of sellers sitting on top, and it would have given us a quick rotation down. But we see that there is a sense of exhaustion on the rally, but also a sense of not a lot of shorts being created here, because we don't see sharp reactions. There could be two things: either there were not a lot of shorts sitting when the rally happened, and so that's the reason we did not see a sharp pullback, or that there are some shorts that are getting accumulated here, and while they are getting accumulated, there's a distribution by the smart money, and they are building up shorts, which could take us down later as their appetite for the shorts is fulfilled. The other scenario could be that we could be looking up at a breakout out of the new high, and this could be an accumulation. So in a nutshell, we cannot say whether it's an accumulation or a short build-up at the current level, and but there's definitely a stall in the rally and a stall. There's some kind of activity. So this is a compression zone, and generally when a compression area happens, we would find a good move out, which in any direction. It could be a good move in any direction. So this is the scenario. I would wait for this channel to break on either the upside or the downside, and then trade myself depending on how the channel is broken, on which side the channel gets broken. So I would wait for this channel to get broken, and if I see that it is broken on the upside, I would wait for a pullback to test the borders of this channel, and then move on the higher side, take a long on that side. And similarly, if I see a fall, I would want to trade on the downside, but on a test of the fall back to the boundaries of this channel. So this is how I would trade on a positional level. Now let's try and build our scenario for tomorrow. So we should go on a 15-day chart, and this is your 15-day chart, and I would add the daily volume profile to get me an idea as to what's happening. And here again, if you see that we are clustering ourselves within a broad period, within a broad range from 41,000 to 41,650. This is a broad range in which we have been traveling for the entire period. Now, if I were to build a composite profile, and I would want to check how the composite profile would look, let me try to build one. So I'm going to draw the tool, taking it from right here to right where it ended that day, and we see that we have closed right at the point of control, which is at 41,460. So we are very much in the balance. we are very much in the balance here. This is the balance area in this, and we are constantly, if you see, oscillating between the edges, which is the way we normally would trade the balance area. And we've had a number of trades in this area, in this, sitting in this balance. So now we could be having some more balance, or we could be having a breakout. Tomorrow the way to trade would be that if we break out of 41,525, I'll mark that here. If we open higher than 41,525, which could be the case because we are seeing the SGX Nifty opening higher, then we would like to trade in a fashion where the prices would open higher, and either they would come down and then they would tend to go up, again test this level, and then go up back to 41,853. Now this is entirely possible because the Nifty moves are pretty significant. So this is one way to trade it. And if we open gap down, say we open gap down, I would think that if we open gap down, I'm trying to check the high value nodes and see what will happen. If we open lower than this level, then there's a chance that we could travel lower, and then we could probably open lower, get up here, and then we could go down in this fashion. We could go down in this fashion. So this would be the likely scenario how we could be able to trade Nifty tomorrow. We are right now in the balance area. If we remain in the balance, we could buy at the low and sell on the top of the balance area. But if we happen to move out of the balance area, then there is a probability that we might continue down or up, as the case may be. So this is as far as the Bank Nifty is concerned, and I hope you have got your levels and you have a broad idea as to where the open would come, and in case the open happens, how you could trade the index tomorrow. Happy trading, guys. Hope you find these levels useful, and it helps you in identifying trades that can make money for you.